Hi, a pleasant day to all of you. This is Sir Dan, and in this video, we are going to discuss accounting cycle. So let us take a look what is accounting cycle. The accounting cycle is the basic process for completing the recording of financial transactions. The cycle starts with recording financial transaction and ends with financial reports. The accounting cycle is used comprehensively through one full reporting period, and we have learned under GAAP that reporting period is also referred as accounting period, and usually companies use 1 year reporting period. Okay, let us now take a look of the cycle. The first step in the accounting cycle is determining the financial transactions to be recorded. And these financial transactions, for you to record this, it must be supported by documents. And the documents will serve as your basis in recording the financial transactions. And financial transactions will be first recorded in the books of original entry, and that books are called journals. And that action is called journalizing or preparing your journal entries. Then after that, you are going to do the posting. Posting means that these journal entries that you have prepared will then be recorded in the respective accounts of the uh, transactions. For example, all cash will be put together, all journal entries that are related to cash, then the cash transactions will have its own record, then all accounts receivable will have its own record, accounts payable will have its own record, and that is what you call the books of final entry, and that record is called general ledger, and the action of doing that is called posting. Okay? Then after that, you are going to total the amounts that were recorded in each account and then get its net balances. Okay? And the balances will now then be summarized in what you call trial balance. So trial balance provide the summary of accounts that were recorded of each account. Okay? Trial balance proves the equality of debit and credit. Okay, so you cannot proceed if your trial balance is not balanced, meaning if the debit and credit are not equal. So obviously, if you have started in your journal entries that the debit and credit of all your journal entries are balanced, then if you posted that, it should also balance the debit and credit. And in extracting the summary or in preparing the trial balance, then it should be balanced. Then after that, again, take note class, as I have said, the trial balance proves only the equality of debit and credit. It doesn't mean that your recording is accurate already. Okay? Then after doing the trial balance, you have to look at it if there are certain amounts that you need to correct, adjust, or update. And that is what you call doing your adjusting entries. Okay? So if you have made certain adjustments on the balances of your trial balance, okay, and then it will now be your adjusted trial balance. So in effect, the balances per your trial balance plus or minus the adjusting entries will give you the adjusted trial balance. Okay? Now, if you have the adjusted trial balance, you can now prepare your financial statements. And the financial statements that you can prepare are the statement of financial position, the income statement, the statement of owner's equity, and the statement of cash flow. Okay? If you are done preparing the financial statements, then the next step is preparing your closing entries. We will learn this class. Closing entries are closing the nominal accounts. We know what are nominal accounts. Nominal accounts, as we have discussed, are expenses and revenue because we have to reflect only the expenses and revenue for each reporting period. So it will be closed so that for the balances that will be carried forward will only be the real or permanent accounts. Okay, and you have to prepare a post-closing trial balance to reflect your real and permanent accounts because you only the nominal accounts, okay, will be on a per year basis. So the accounts that will be carried forward in the next reporting period are only the real and permanent accounts. And what are these accounts? These are the assets, liabilities, and equity accounts. So the revenue and expenses are to be closed. Okay? Then after that, we are ready to begin a new reporting period, and then we can start again in recording the financial transactions for the new reporting period. Okay? Class, I would like also to include in this cycle the audited financial statements. In most situations and most companies are requesting the external auditors or an external party to perform an audit of the financial statements. What is the purpose of that? To give credibility on the fair presentation of the financial statements. Because if it was only prepared internally by the internal accountant and there was no external party that validates the fairness in the presentation of the financial statement, then it has less credibility. Okay, but if it is audited by an external auditor and the external auditor provides an opinion that the financial statement was fairly presented, then it will give higher credibility for the user. Okay, the auditor, by the way, can express several opinions. The auditor can express a clean or a clean opinion, and it is also called unqualified. There was no qualification, or unmodified. There was no modification. So it is a clean opinion, meaning that everything is okay. And the auditor can also provide an opinion of modified opinion or qualified opinion, meaning that some are okay, but there are certain things that are not okay. Okay, and the auditor can also express an adverse opinion. Adverse would mean that it's not okay. The financial statement is not okay, and the auditor can also express an opinion of disclaimer, meaning the auditor does not want to express an opinion. Probably the basis is that the auditor has no basis or the documents were not, or the records were not really supported by documents, so it could not be validated. Okay? So class, after the audited financial statement, then it can be communicated to the users of financial statements. Okay, class. That's it. That's the accounting cycle. If you have questions, please let me know. And bye for now, and hear me again on our next